Hey everyone, it's Kyle Wood here with United Country in Rocky Point, Mexico. A little bit chilly out this morning, so I'm in the condo right now. It's going to be about 75 today. I think it's 57 now. Early, it's about 7:30. I'm heading out to Phoenix to be with the parents. So that's about a 3.5 hour drive from here. Not bad. Listen, I just wanted to touch base real quickly. I want to thank you for joining our second webcast. These webcasts are really designed for informational purposes and to give our clients, our buyers and sellers, some additional information that they can use to make a informed decision. If you'd be so kind, please fill out the form below. We do have a lot of clients, a lot of interest, and it will help us help you make an informed decision, and also it help us tailor these webcast videos to answer any questions that you might have. That's really what we're here and what it's all about. We're going to be talking today real briefly about the capital gains tax issue that many of our sellers are facing. I'll give you a couple examples. I have a new listing, a possible new listing out in Playa, Paloma, as well as Las Conchas. And both of these sellers are facing the same issue, and this is very common for sellers around the Puerto Penasco market. Mexico will tax your capital gains at approximately 32% of the gain. And I'll give you a really easy example that really kind of highlights what the issue is here. You can purchase a property. If you purchase a property, let's say at $100,000, back 10 years ago, I guess, when the peso exchange rate was 10 to 1, and you sell it now for $100,000 at 18 to 1 or even 20 to 1 right now, you're looking at a potential of $1.8 million peso gain. Now remember, you buy in dollars, but it's recorded with the city registry in pesos. So, and when you sell it, the same thing happens. You buy it in dollars, and it's recorded in pesos, whatever that exchange rate is that day. And then the government will charge a 32% tax on that gain. So I've had clients be charged anywhere from a $10,000 to an $18,000 capital gains tax that they've had to pay to the government at closing. So we like to get this information out front before we decide to move ahead and list a property. These figures, particularly with the initial recording, can be found in your trust, or it can be found at the city registry. There are ways that we help our clients reduce that capital gains. And there are really three ways that we do this. First, and you're going to want to ask any agent to look into this. First is that any notario you talk to, and we do shop around the notarios for you, they are responsible for calculating capital gains tax. Any notario you talk to will have a different capital gains tax estimate. How they figure it, what they put into it, it's their responsibility. They are liable to the government for a proper capital gains tax calculation. So that's the first thing. We shop that around. The second thing that we do, second process that we can take, is that if you made any improvement and you have receipts or you have facturas for any improvements that you've made, provide those to us. That will help us increase your cost basis on the property, okay, which in effect will help us reduce your capital gains tax liability. And the third way is that if you don't have those receipts, we can do or request an appraisal of any upgrades that you've made. So an appraiser will come in and appraise just those upgrades, and we can use that to justify increasing your cost basis. Additionally, when you go to sell, the commissions can also be included within your expenses to help reduce the recorded price. So it's something that everybody, particularly sellers, need to know about. And it just helps the process go smoother and help you make an informed decision as to where you want to set that sales price. So that's it for today's webcast. If you have any information, please feel free to give me a call. We'd be happy to help you out. And as usual, make it a great day. Take it easy.